Hi guys, welcome to another episode of the Bullish Banter podcast. Today I will be your guest, and we will be having Jesse, our usual host, will be moderating the podcast. And we have a very interesting topic. So we will be talking about the rise of the Nasdaq and the impact of AI, and of course, all the craziness happening in the AI sector and how the stocks are performing. Welcome, Jesse.
Thank you very much. I know I was on a break a little bit. I hope, based on what I've heard about the last episode on AI, I think it is something that is definitely not just hip, but very vital in the development and adoption of technology in various sectors of the economy. Perhaps how have you been?
For me, I've been fine. Busy week, busy numbers, a lot of craziness in the markets. But so far, so good.
I know when I was away, not Nasdaq, but rather NFP came out on the 2nd, I think, of June. Were you in the market or you already done for the day?
I was in the markets, actually. It was a big surprise, over 300K jobs. With an expectation of 193K. So that was almost double. So it was a big surprise, but at the same time, shows how tight the US labor market is. And of course, Jerome Powell has more work to do.
Besides that, I think one of the most interesting factor, or rather feature I was following was on the oil and the OPEC meeting over that weekend. So I literally followed from the first day of the OPEC meeting. So I had all the Twitter handles of those attending the meetings, given Bloomberg and all the other major news outlets were banned from attending. So I had to follow some professors, at least from the energy sector, just to get an update on what they view of the market. And one of the things which I found quite interesting was that even though fossil fuel is deemed to cause environmental damage. It is here to stay. That was quite clear. And I think another thing which was coming out clearly was that the grip of OPEC on price controls of oil is slowly moving away from them, slipping away from them rather. So even if they make statements, even if they continue like they were, Saudi Arabia added additional, I think 350 million.
Actually, 1 million.
1 million barrels
for a whole month.
So I think all their talk on how to control the price of oil to go back to 80 is not really being felt rather on the markets. So that was some interesting weekend for myself.
For the audience, OPEC is it's a cartel of the oil producing and exporting countries, currently headed by Saudi Arabia. So they are currently on I would call it a policy where they are cutting the oil output to make sure that the oil output is small, which would eventually maintain high prices, which gives the overall members a benefit of selling oil at higher prices.
And just to wrap up on it, I think also Aramco raised the price of their oil just to counter that and also cement that decision to raise the price of oil. So it was quite interesting to look at how the price of oil was moving. I think it only moved by $2 to around 74, the highest. At least that would be US spot crude and Brent as well, just a few dollars on top and before going back to the comfortable $70 a barrel. I know Biden and his administration are happy with that for inflation purposes, but obviously the oil marketers are not really happy, given also, they are running a loss.
Our chief marketer will also be very happy with low oil prices.
Definitely. We hope it is extended for a period of time. But for traders, I think what I noticed from my own observation, and obviously my account, is that the market or the prices in the markets are obeying the support levels and resistance. So that is good. For fundamentals, they cause just a small spike, but not really a sustained action in the markets.
I think May was a very technical week. Support, resistance, trend lines were playing out very well. But going into June, especially 14th, when the Fed meets, we could be seeing out of fundamentals influencing the markets.
Now, and obviously, Apple released one of their newest product after, I think, significantly almost 8 years since.
Yeah, since
iWatch.
2014. The last time they released a new product was 2014.
Yeah.
So they've been just busy cooking. I'm sure that kitchen was busy.
Yeah. Now, I think now that brings us to the topic of the day, AI.
Yeah.
And I was looking at the presentation that was on Monday.
Yes.
Was it on Monday? Yeah. So when they were presenting that Vision Pro, and I'm looking at all those cameras, the new sense, they are very good at naming their, I think they have a cult, so obviously the cult will approve everything.
It's funny, they have the first product that doesn't start with an I.
Yeah, by the way,
Yeah.
But they have one thing that is maintained.
Yeah.
Pro.
Yeah, pro Razima.
Pro is maintained. Pro is very important. So it was a nice product, at least how the reviewers were able to, several reviewers like MBKHB and all those tech reviewers were able to say, but that price,
Yeah, the price is crazy. 300 and that was $3,500.
Yeah, that is like 600k Kenya shillings.
Yeah.
For a pair. And also,
before COVID, that would be 350k Kenya shillings. But now it's 600. Whoa.
Almost. Realistically, it would be around 530 if you're doing with 140 shillings to $1.
Yeah.
Now, I was looking at the product, and it is linked to all the iOS ecosystems.
Yeah.
First of all.
Yeah.
And secondly, one thing which was very interesting is the cable that it's connected to your to the battery.
Yes.
That is what I found it quite interesting. I think they're trying to diversify their wings.
Yes.
They have been more or less benefiting from the loyalty of their customers.
Yes.
But I think the open source setup of Android and obviously Windows has allowed for innovations within the sector, but them locking them out and just making their products quite basic.
Yeah.
I think I was seeing a lot of comments saying, especially, you see, when they were releasing that product, the price literally dropped from almost $180 dollars a share to $174. So investors are looking at it as if the company has peaked.
Yes.
Even though they're launching new product, investors are not really optimistic about it.
It's quite a usual thing with Apple product releases.
Okay.
So whenever you're expecting a product release, you'll see the stock pumping up. They buy the rumor, sell the news.
Yeah.
So people will buy the rumor, and then when the product is announced, they take profits, and that's when you see that effect of the stock falling when they announce a new product.
Now, it was, I think, almost 2 weeks after Meta launched their own VR headset as well.
Yes.
So now, and theirs is almost $500, I think.
Yes.
That will be an interesting one to see.
So the beautiful thing about the VR headsets, I think they are a game changer. They are combining several devices that we normally have.
Yeah.
Like for you, if you are a normal tech guy or operating in a normal work environment, you probably need to have a watch, maybe not. Need to have a laptop, a smartphone, headsets, that is headphones.
Yeah.
So like the VR comes with all those devices in one.
Okay.
So you no longer need a laptop because it can do all the processing that the laptop can do. You don't need a smartphone. You don't need headphones. You don't need the iPods. Everything that they have in their collection of devices comes in one package.
I think that would be a good product to launch 2020 when there was COVID.
Yeah.
Because you're in your house.
Yeah.
So it would make sense. Now, I've heard from other people who like classic watches, the classic chromatic watches, the automatic where you, mechanical basically, you're able to see the arm and the second arm. Yeah. And then the Apple Watch, you only use it when you're going to exercise, so you want to measure how many calories you have burned at hill, right side, if you are a cycler, how many kilometers you have done. Yeah. So that is me, by the way. I prefer to. I find the tracking of all your activities during the day.
Yes.
Not very interesting, but to each their own, basically.
Yeah.
Now, Nasdaq.
Yeah.
Quite an interesting combination of course, shares.
Yes.
And the reason I think most listeners would want to hear what we'll be discussing today is because people are looking not only at long term, especially traders, those who are trading maybe currencies, they are familiar with it. Now you are looking for something maybe challenging or something that you can lock in for a while.
Yeah.
So I think Nasdaq is a very good representation of the health of an economy.
Yes.
If the index is appreciating in price,
yes,
it means that most of the big companies, the big cap companies, are also appreciating in price. And I think with the Apple introduction, AI has been a biggest driver. And
actually,
NVIDIA.
This is the one moment in my life where the stock market indices performance don't actually reflect what is happening in the economy.
Okay.
For instance, the Nasdaq is up hot. 27.82% as per today. That is since the beginning of the year. So these are a really good performance. If you are an investor and you get this between January and December, you basically go home happy. You know, it was a very successful year. But having this in June, it's awesome. It's very impressive. Especially considering we are coming from last year when it was basically a bear market. A majority of the indices closed on a negative. However, if you look at the key highlights, like the top 10 stocks in the Nasdaq, I think they carry the day. Top 10 are basically Microsoft, Apple, Amazon, NVIDIA, Facebook, Google, Tesla, Broadcom, and of course Pepsi. So among the top 10, it's only Pepsi that doesn't
deal with the tech.
Doesn't have AI. You know, like all these other companies are AI software based, and they are actually making some good revenue out of it. Mainly from the benefits they are reaping. So up from, let's say, machine learning, being able to generate code, interact with their clients. There's just so many benefits that they're getting from AI that are making their stock very attractive.
You know, interesting fact, during that WWDC 2023, from the, I think it started at around 8 p.m. They never mentioned AI any time. They never mentioned. They said machine learning. They used
predictive
models. They never used artificial intelligence, not once. Even from the launch of the iOS 17 to that VR headset, there was no mention of AI.
So to our listeners, WWDC is a worldwide developer conference that is usually held by Apple every year. So on the annual events, you get to learn about the tech developments with Apple. And it's one thing that investors closely follow. I think second to second to the annual Omaha meeting.
Berkshire event, I think that is one of the largest events which investors actually pay attention to in terms of products or financial reporting. I mean, I think yesterday we had NVIDIA having an event, but it is not something that mostly, let's say, investors do follow. But these two, they attract worldwide attention of all investors.
Right. Fun fact. Time for a fun fact. The S&P 500 would be down 9% today, year to date, if not for the performance of the top 8 companies in the S&P 500.
Which are those companies?
Top 8, I just mentioned them: Microsoft, Apple, Amazon, NVIDIA, Facebook, Google, and Tesla.
In addition to that fun fact, there is usually this abbreviation, and I know a lot of long-term investors within the CFD market or even just stock market in the US, Facebook, FANG, Facebook or Meta now. I think now it should be MANG.
Facebook, Apple, Amazon.
Amazon.
Netflix. Used to be Netflix, but now it's shifting to NVIDIA.
NVIDIA. But Netflix will come back. I think with the new products, I don't know, but their writing so far, in terms of the movies that they have released, they have tended to elicit good subscription. I think from their Q1 report, they had very nice, up, I think around 5 or 10% in the subscription-based increment.
Yes, but I think they were taking a hit. You know, the current trend of you go woke, you go broke. So they started introducing out of work stuff on their content, and people started withdrawing and preferring other platforms. So they took quite a hit, especially from Walt Disney. Walt Disney experienced some good growth, especially during the COVID years.
So I think with them, with the introduction of NVIDIA right now, and their presence predominantly within the AI space
Yes.
creates a very significant look into their long-term. I think they added almost 200 billion
Yes.
when they announced their quarterly performance.
Yeah.
Now, looking into the future, we know AI and all these new products which are coming into the market. You even if you're using perhaps Bing, if you're using Google Bard, if you're using Siri, or for Samsung users, Bixby.
Yes.
They are able to make your work efficient. I think most investors now, I think we have spoken about this before.
Yeah.
Investing has become a cyclical of around 3.5 years, not more than 5. That is number one.
Yeah.
So now, within the last, let's say 1 year, AI has been the talk of town.
Yes.
And now, with its introduction to a lot of factories, a lot of even financial analysis, I think it causes for, when you are analyzing a company, what is their adoption of technology, especially in the predictive models, be it their revenues projection, be it their growth, be it their work efficiency. So that is number one. I think even for investments, firms are adopting it to allow them incorporate what other people are doing. And obviously,
I think the top thing that AI is impacting businesses. I would start with the language models like ChatGPT. So you're able to incorporate that in your products. For instance, in customer service, you're able to serve your clients better. You know, like customer service, if you're dealing with another human, they could be in traffic, they could be moody, they could be rude to you. But the AI is able to maintain company policy. It's able to maintain a very lively conversation with your clients.
Do you feel like the AI conversation, that is what I saw from the Apple event? I think we'll piggyback on that because it determines a lot in the future. Now, do you think like there is a lot of hype within it? Like it is becoming like how do I put it? Back in the 2000s .com era, whereby AI is basically the conversation of everything, as opposed to its contribution to not only work efficiency but also cost efficiency for operations of companies?
I think for people, it's ChatGPT, like the language models, where you're able to like
type your question,
get fast responses that are very objective, no ads. So it makes work easier. For instance, personally in my research, something that would take, let's say, at least 4 hours, I can do it within 15 minutes. So it makes it so simple. And for developers, they're able to implement code real quickly using these models. Graphic designers can basically like, develop images, content very fast. And I think the latest production was with Adobe, Photoshop introducing an AI model. You can basically search or create images using AI. So besides this, there's other applications I've seen. In terms of data analysis, AI is providing real good support. So that's why you're seeing companies like Google and Microsoft gaining traction from investors because they can analyze data faster without human support. Just using AI, they're able to like analyze large quantities of data within a very short period of time using less resources. So also in terms of production, manufacturing, we have seen companies like Tesla add AI models, robots in their factories, and they have made their processes faster. So a car that would take, let's say, a year to manufacture or assemble is taking a much smaller duration. And of course, they're saving on labor costs. Now,
I'll be asking 2 questions. I think this is what a lot of listeners and perhaps traders would want to know. I don't know if you have encountered this question, but traders sometimes want to understand how can you incorporate AI into trading. Now, I don't know how to phrase this question because it can be either in 2 fronts. 1, analysis or research. And then 2, automation of your trades, right?
I think we covered this in the previous episode, but I will answer it. So when it comes to trading, let's say you are an individual retail trader, you want to know like what's currently trending in terms of the stocks or assets that you're investing in. So a stock trader wants to know like what's the most hyped up stock in the markets right now. So you can't literally like manually scan all social media platforms to know what is trending in time to trade that information. But that with an AI application, you're able to find that information quickly.
Okay.
So there are platforms that are being developed currently that are able to monitor sentimental analysis in the markets to see what a lot of people are talking about in social media circles.
Okay.
So besides that, there's also AI models that take on predictive models in terms of analyzing data. So they're able to learn stock tickers, what is like the best performing stock, which is the most undervalued. So you're able to run those risk and predictive models to understand patterns in charts.
Yeah.
And this gives you a real advantage. I've seen the rise of those happening.
Yeah.
So you are seeing out of AI-based models that are being used by traders to automate their trading.
Okay.
So I think it's going to have a real impact in trading.
Yeah.
And if you want to be early, you have to start now.
Basically understanding how to integrate it as opposed to putting it and you don't know how it will complement your strategy, perhaps.
Yes.
Now, to the second side, I know a lot of people are worried that maybe AI will take their jobs. And based on what you have just said with the Tesla and everything, I think there is like somebody who acts as a stopgap.
Yes.
Or rather the prefect of how AI operates and perhaps what it can do from within the operational set, right? Yes. So I think that is also important so that I don't think, and I have shared something along this line before, I don't think AI is here to take our jobs. It's like computers or even phones. There is this documentary, I don't know if you have watched it, Blackberry.
Yes.
Blackberry documentary, how it started and everything.
Yeah.
It came in a way that they were just trying to make it efficient.
Yes.
And so what they decided to combine is a pager, of course, what is it, a computer, and email or something like that into just one device, right?
Yes.
Now, with that introduction, obviously, it would appear like it would cause the death of the industries of page makers, computers, and of course, those who sell minutes for phones, right?
Yes.
But actually, it has led to a robust growth of several sectors in the industry, from fintech to different phone manufacturers to different operating system manufacturers. So I think with AI, it is better to understand how it can suit your skill.
Yes.
And then you're able to like know, okay, this one.
Okay, the thing is, in the long run, AI will take our jobs. That's guaranteed. Especially for like most young people, especially here in Kenya and the rest of the world. If your skills are majorly in tech or content creation, AI is able to do that 1,000,000 times better than you. So whereas you might have the originality and creativity, it's learning faster than any other sector.
Well,
so like let's say you are a software developer. So right now, using AI, you're able to shorten your time. If you are to develop a certain software within 3 months, you can cut that to 1 week or even less. And you become so powerful, you're able to do more with less.
Okay.
So it's currently empowering a lot of people to do more with less.
Okay.
But then over the long run, the AIs will learn much faster. And eventually you won't be needed anymore. Or a job that was being done by 10 people will now be completed by 1 person, leaving the other 9 people jobless. So it's a real threat.
I think is it Terminator, which started in the 80s. If you watch from Terminator 1 or something like that, you feel like technology is about to take over. So I think it's something we have all been waiting for a while. And AI seems the closest one that is causing real risk. But I am quite confident that it is not something, personally. It's maybe listeners would put in their opinion down there or tag us on social media.
As I was learning, doing my research for today's episode, came across a very interesting quote. They were basically saying that AI is the second coming of software.
Okay.
Yeah, like you see how there was a big boom when software was first introduced back in the 2000s, like in the .com boom. Everyone with a piece of new software with some new functionality was making real quick money out of it. Now, software is being reintroduced into the internet, but now with more capabilities, faster automation is a thing, and it has become so simple, AI agents. So it's creating a completely different understanding of the internet as we know it.
Okay. Now, regarding Nasdaq, as we sort of wrap it up, I know we are expecting Fed to make some decisions based on some of the data that has been coming out, including yesterday's purchasing managers index of around 50.3, which was a decline.
Yes.
And I think also we'll be getting crude oil inventories today, which based on, of course, what I just mentioned earlier about the OPEC meeting, I think they'll be releasing more from their inventories so that they maintain the prices depressed at whatever it is right now. Do you think... for investors who are looking to invest long term, one thing that I think I must mention is that you are able to earn dividends from investing in an index like Nasdaq. So that is a secondary benefit besides the price appreciation and depreciation of it as well. Where do you think, or which companies per se, besides the 8, should an investor be looking at so that even if you're investing in Nasdaq as an index, you also perhaps are individually picking these CFD companies, at least what your FX offers, so that you're able to go on to it on a long-term basis?
Okay, first I would like to mention that last week, and of course the last couple of weeks, everyone was worried about the US defaulting on its debt. But since President Biden signed that bill, now we are looking at US Treasury that is looking to raise at least $1 trillion over the next couple of weeks in order to keep the government functional. So now the focus have shifted from that to the Fed fighting inflation, which stood at 4.9% in the previous reading. So we'll be having an inflation number next week and a Fed decision. So if the Fed keeps tightening policy, then we might see the equities start to take a step back. So one of the key signs I saw today was a report from the CFTC. So the Commitment of Traders report, which basically reports traders' positions, showed that the short interest in SP 500 was at 17.1%, which is the highest since September 2007. So like a lot of traders or big banks and hedge funds are overly pessimistic in the stock market and they think it's currently overvalued. Main reason, I mentioned that the current rise in the S&P 500 is majorly contributed by a very small number of stocks. So a majority of the 500 companies are losing, but the top big stocks, which basically take the bigger weight, have contributed so much gains that the overall index looks like as if it's healthy. So my projection is that if the Fed keeps tightening, we could see the stocks take a step back. So we could be seeing the Nasdaq pull back, the SP 500, the Dow Jones. But if the Fed chooses to maintain rates level in preparation for a rate cut, then in that case, we could be seeing the stocks continue to rally. So as for the Nasdaq, I think the top 2 stocks, and this is not a recommendation, it's not a suggestion to trade, but I've been looking at Palantir. I think it's awesome. It's way up over 100%. Also MongoDB, which is basically a software-based company that provides database solutions to businesses. It's also a very interesting take to look and add to your stock watch list.
I think maybe we can create a summary of this so that when the episode goes out, it is attached to maybe below it. Of course, as usual, this is mostly opinion based, not an investment advice. I think based in addition to that statistics, I was looking at the VIX, which on our platform is a volatility index measure. Within the equities market, it is at its lowest since I think sometime lowest since I think was it April or March, and then again around 2020 thereabout. So it means that the bulls have been quite steady with their price action. I think it was 2 weeks ago when we were looking at Nasdaq and we were expecting some pullback, but eventually it seems those who are optimistic about the companies they've invested in are locked in for the long term. So that is, I think, unless something happens in the future. Other than that, I think it has been a good conversation. It was a good break that I had taken.
And welcome back.
So, thank you. We hope you have learned 1 or 2 things. As usual, do not hesitate to give us a question, comment, or even an inquiry.
Of course, share the podcast with your friends and family. And of course, remember to subscribe to our YouTube channel.
I know today we have been sounding like bullish banter, but I mean, based on Nasdaq price appreciation, of
Definitely,
course.
it's very bullish.
Yeah, but we hope you as a trader are learning something from the macro aspects of investing space. We will try and do perhaps next week, if the CPI comes out, perhaps a space on the same.
Yes.
Maybe in the future we can do a consultation or a conversation with other traders as well, where they feel like they need some elaboration on. Feel free to either ask Rufus at Rufus KE.
Yes, on Twitter.
Yeah, at FX Pesa KE, at Gola J4. Other than that,
Bye.
adios.